While I have the systems behind me chew on the Santa Clarita real estate market, I'll give you some information with regard to what sellers are looking for, at least this time of year. We're at May 6th, the day after Cinco de Mayo 2026, and I'm Connor McIver. What's happening in real estate currently is we're watching as more real estate sellers are starting to contemplate. The calls have increased. I see this not only in my own realm, but with some of the networking agents that I happen to be tied to, and they're also mentioning the same thing, but they're very concerned about costs. And they heard about the lawsuit that came down back in 2025, and they have seen that there's some changes out there in the world that they see in the online channels. Also, they're watching major brokerages be consumed by other brokerage, and then you also see many different lawsuits sellers have concern about regarding even the RICO acts being violated by particular companies. And then you have those same syndication companies tying in with our own Realtor.org or Realtor organization, and they're confused. Those are some of the questions I actually have to field talking about where this is going to end up settling. And as far as being a realtor or not being a realtor, there is a enforcement mechanism when you are a real estate agent and a realtor. The reason why I say realtor is a lot of people include an additional syllable, realtor, but it's actually realtor. And it is a trade organization, and that particular trade organization, which is different than a professional organization, I guess when they first filed for it many, many years ago, the mistake was made. So it's kind of a lobbying system, but there is a enforcement mechanism there. We have the Realtor Code of Ethics, and there are rules that are finable, suspendable, and also legally enforceable by this particular entity. So if you hire somebody that is a realtor, not just a free-form agent, there is an enforcement mechanism if they screw you over. I guess that's the nicest way to put it. Now from there, you move from that world into the world of wondering how that's going to impact you, because it seems like we have teamed up with a company that's under some kind of somebody watching them that guilty of RICO, allegedly has committed some kind of RICO violations. And that's not good. And you might be wondering, well, why would I do that? Well, the enforcement mechanism hasn't changed. It's still going to be enforced. If I screw anybody over, it's going to first start at the local board of realtors. I'll back up. It's probably going to start with the broker whom I'm with. That particular alignment, they're probably going to have an issue if I did do something wrong, and of course blackness of heart and doing it on purpose, trying to take advantage and screw somebody, whether it's a seller or a buyer. But from there, if there's no solve at that particular point, then that next step is going to be the actual board of realtors. There's an enforcement mechanism there. There's also RESPA, which is like the internal affairs over real estate. And then from there, it gets even bigger and more people get involved depending on how complex or how horrible the particular violation happened to be. So you watch the whole process. There is a pecking order, and also these companies being consumed by other companies. It's going to be the same all the way to the end. I don't know what's going to be happening in the future as far as Remax being acquired by Real, and you have the Compass being acquiring companies and all of these other things. What ends up being, I think, more important is the person you hire having some knowledge about them, and then having some trust established. Now, as far as my clients go, I hope to eventually earn your trust, but business is typically that first step. They see what I do, they see the content I produce, they see the systems that I use in order to help my sellers get their property sold at the best possible situation for them. Notice I didn't say price, because sometimes price, although it's a big factor in a lot of people's cases, sometimes when it comes down to the highest offer being written and maybe something a little bit lower, but the financing on the lower one being more substantial and better, and then looking at the credit scores and looking at all these other things, which I always digest, next to my sellers or on Zoom with my sellers or however they want it presented. Ultimately, sometimes it is not the highest offer that gets it. It's the better one is going to be the one that has less money. Now, are there ways to counter if it's multiple offers to try to get the lower one with better financing to match the higher one? Absolutely, and that happens all day long. But it's not always the price, which is actually the winner of the particular competitive offer scenario where you have multiple offers. Now, with regard to sellers, another thing that comes up, especially recently, is pricing. How do I know what my property is actually worth besides listening to you, Connor? Well, what I do is I take all the syndication sites averages offline, exactly what it's saying for your residents, and I have that in front of you as well. Then what I do is I pull the multiple listing service and I look at it like an appraiser would, and I've been blessed back in 2009, 2010, I went through training with Citigroup. I was one of the foreclosure agents they used here in Southern California, one of a handful. So I listed literally hundreds of properties that were in a foreclosure state, but in order to do that, it wasn't just they would send me the listing and I would go for it. I had to do broker price opinions on these properties. And in order to do it the way they wanted it, I had to go through some training, pass a test to become certified in that regard. When I look at properties, I look at it from that particular vantage point. I look at it from that experience, having looked at literally thousands of properties and giving my opinion of what they actually are worth. And you have to vary your opinion on where the market happens to be trending. For example, back in the foreclosure cycle before the end of 2011, beginning of 2012, we were on a declining market. The end of 2011, beginning of 2012 was kind of the bottom, at least in greater Los Angeles, Santa Clarita Valley. That was, if you had the suitcase full of money that you'd been saving for the right time in the world, that was the time to buy. December, January, February, March, 2011, 2012. But that's when the market started to turn. It made that turn just like the chart behind me. We are currently, of course, with regard to artificial intelligence and technology on an exponential. It's been bumpy up and down, but right there, that's when this whole world is going to start to really move, and we've already seen that. But moving through those particular historical records, looking at the way that real estate started to increase in value at that time, the sweet spot would have been there. So prior to that, developing a cost estimate on property, a value proposition, it typically was based on a 90-day in the future estimate of value. And you can track that as long as there's no big changes in the market, anything like the Hormuz and all this other stuff. As long as none of that's happening, you can kind of track it. And then in the middle, let's say day 45, after you've given your estimate, you have the listing, nothing's moving, nothing's changing, and you've had that one price reduction, which typically with the banks was done strategically at 30 days. Once that ends up happening, then you have to reevaluate and find out where you're going to be. And maybe the market took a turn because those listings that we had on January, February of 2012, we started to see that this 90-day in the future estimate of value started to change and the trend started to go increase. So then we had to add on that percentage. Now we didn't have good data because we had just switched cycles. But after 8 or 9 months into 2012, then data was pretty relevant that there was a particular percentage per month of properties were going up. So to establish a 90-day in the future estimate of value, it wasn't that difficult. That being said, that's kind of how things should be looked at from a seller's perspective, and the information that you're seeing as far as the properties that are going to be used in comparison with yours, they got to be close. They can't be in the next county over. They should be very close to where your property is, and perfect scenario would be by your same builder, built around the same year, and phases sometimes at new housing when houses are new, and we're blessed with that in Santa Clarita. I remember when there was more vacant land than houses out here. I've been out here since '96, and now we see a lot more houses out here than vacant land. But I remember the trend. So we get to go back, and I can go back from my memory, training, knowledge, and experience from seeing that particular market, established homes built in the 60s, late 50s, 60s, and 70s, then looking at everything, 80s and 90s and so on as we continue to have new housing. But watching all these different areas change, when you're looking at your residents, it's important to capture those properties that are mostly nearby. Same builder would be lovely. And if you're able to find a good number of comparables that are sold in your neighborhood, and I don't mean cash fire sale offers, because you also have to look at the financing. If the people buying those residences that are in close proximity to yours, very apples to apples in comparison, same builder, maybe same bedroom count if we're lucky, maybe same exact model, maybe you have 4 particular models in the residence you happen to live in, maybe you have several different elevations, meaning the choices that people get to make, whether you have rock in the front or some kind of pretty colored styrofoam or shutters or some kind of different look, maybe farmhouse, craftsman, two-door, whatever that particular style happens to be. If we can match all of that up with at least 3 good solds within the past 180 days, and closer to 0 days is best, because let's say you get into escrow and one of those comps falls off, and the other two comps aren't as high as that one that fell off, then the appraiser that's coming in representing the buyer on the purchase of your residence is going to have a little bit more difficulty. It's not that it can't be done. They'll probably use other comps, but we have to take all of that into account when we're establishing value. And that's a lot different than going to Zillow and asking Zillow what your house is worth. It's a whole different dynamic. Now, they're going to pull in historical data, they're going to pull in public records, but to see all the nuance of offers made, because if somebody's writing a VA offer on your house and it appraises for a particularly odd high amount, and the other people that purchased are conventional, I'm going to bet all day long that that VA appraiser wasn't pulling punches and really did a good job, because they're being watched by so many other entities. This is a government loan. So if VA or FHA, also a government-backed loan, if both of those appraisers that go out to properties, also the price of admission for both of those is very low. And FHA is 3.5% down, not your typical conventional, which can be multiples, but usually traditionally the conventional offer was 20% down. But you see those different variables in the offers, and when you have FHA and VA writing an offer and it establishes a particular price that's based within that 180-day model, and it might be higher than any of the conventional offers received, that data is hugely important, because that means that next appraiser that comes in, when the buyer comes in on your residence and the appraiser is being paid by that buyer to the lender dispatches the appraiser to your house. When they come out, they're going to look at those comps, they're going to look at those types of loans, they're going to probably have a little bit of ease sprinkled on them, because they're going to say, well, these appraisers did this, and those appraisal reports are incredibly detailed. When somebody comes in with a conventional offer, don't get me wrong, the appraiser does their job, and there are still people to watch that. But when somebody's coming in with 20%, 30%, 50% down, yeah, that pencil just isn't as sharp. It doesn't have to be as sharp as far as the numbers go when the appraiser is putting together their sheets. In fact, you can kind of see the difference whenever I go out with, because I always meet the appraiser on my seller's listings. I don't represent buyers, I'm a seller's only agent. So when I go out to the property and I meet with the appraiser who the buyer hired, and that is my job as the listing agent, I can see a big difference between a VA, an FHA appraiser, and then a conventional appraiser. The conventional appraiser, yeah, just a few minutes, handshake, hug, no time for anything else, and boom, they're out of there. The VA folks, yeah, they're a little sticky. They hang out for a little while. They do a lot more measuring. They do a lot more looking. They do a lot more investigation. At least that's what it appears to be. And I've been doing this 28 years, and it seems to be true to form all the way across the board. So that's important to know if you're contemplating selling. Also, this time, right now, the spring, it's a big deal. Springtime is the time when people start to think about jockeying for position with regard to their kids in schools. And it's important because right now, if you have a house that's in a wonderfully lovely school area, and most of them here in Santa Clarita Valley the schools are blue ribbon in a lot of cases, especially on the elementary end of it, you're going to find out that your house is going to command a premium as far as offers, numbers of offers by people that have probably relocated from Los Angeles, or maybe been in a less desirable area in Santa Clarita, if that even exists, and want to maybe step it up for the kids. Also, people that have their kids in private school, that's a big change for them as well. They're going from private to public, but the public school could have better ratings than their private school experience for their kids, so they're, of course, all in out here in Santa Clarita. So if your house happens to be in a blue ribbon school district, you can call me, I can give you that intel, then you're in pretty good shape, especially this time of year. Every year between spring and summer, that's the most movement of real estate in most markets. Depends on the market, depends on the shell shock of the historical market. I know after the last foreclosure cycle back in '07, it took a while to have that springtime rush start to happen again. But after people recovered from all the short sales and all the distressed properties, then it did come back, and we started to see the cycle start to become more normalized. Even now, with interest rates higher than they have been in the recent past, it's starting to become a much more normal cycle. We don't have the volume of listings. The other thing that's holding people back from listing, just so you sellers know, because you might be in this boat as well, the golden handcuffs. You have that super low mortgage rate. You've had your house 5 or 6 years. You have it somewhere in the 2s and 3s. And now you're thinking, God, Is the pain point enough for me to list my house, sell it, and go buy something else? There's a couple ways you can do it. You can actually buy something first, then sell it. There's loan programs out there that do that. They cost a little bit to procure, but you can actually have the house purchased and then sell yours. Now, here's the deal with that. That could be stressful, because what if your house, and all the numbers have to line up. The lender that's floating this type of a loan has to be made aware of costs, see comps. That's my job. I'll be able to put all that together. So you could actually go out, find something without worrying about selling yours first, and you'll have 6 months, I believe is the rule, to actually get yours sold. So that's something to look at. And it works. It's an actual product. It's something that lenders offer. And right now in the market, it depends on where your house is located, what you're selling. Is your house a step-up home already, or is it maybe an entry level for a first-time buyer? Because there's other programs that go with that type of buyer strategy, and maybe it's a good place for you. But just knowing that exists. The other thing, if you're thinking about selling your house and you have that super low interest rate, something else that I talk to sellers a lot about is maybe you can transfer that rate. Maybe a buyer can assume that rate from you, and that would make your house even more attractive and maybe equate to a little bit more money on the other end, because if a buyer is able to pay you, and of course everything has to be above board and legal, I'm not talking about under the table stuff, but if a buyer is able to purchase your property and obtain that same interest rate you have because your loan is transferable to a new buyer, that could give you a little bit extra in the world. And it might not be a bad idea to investigate to see if you do have a transferable or an assumable mortgage where a buyer could come in. Now, usually if you have still 30 years left on it and you have some super low mortgage, however you did it, I don't know. But if you have a long time, typically it's not good. But if you've paid down the residence, it could be a buyer would come in and inject the difference, whatever you want to sell the property for, whatever the value happens to be, could inject the additional in cash and make the deal work out for you. Buying first and then selling later also helps too, just to piggyback on that, because the house is vacant. It's able to be staged if that's what we decide to do. And vacant houses actually are easier to sell than occupied houses, especially because it comes down to an interruption thing. And let's talk one more thing about interruption. If you have people saying, we're going to just pay cash for your house, you're not going to have to worry about showings. You're not going to have to worry about people coming in and interrupting your dinner. You're not going to have to worry about keeping your house picked up all the time. You're not going to have to worry about open house where all your neighbors want to come in and look at it. Listen, worry about it. Don't give up your house at a discount because you don't want to be inconvenienced. As if I'm your dad, a dad that loves you. The point is you need to get the most money out of whatever. And to sell it to one of these companies that are just going to turn around and do some repairs or maybe some paint, maybe some carpet, and flip that property or rent it and hold it if that's their strategy, it does you a disservice. It's okay. We'll make it work. If you don't want to be inconvenienced, want to show it 3 days a week, then that's the way we'll set it up. If you just want to show it over weekends, I'll explain to you the detriment in that, but that's still your call. If it's priced right, it's not going to have to be on the market very long to really move. And priced right doesn't necessarily mean a discount, because finding out if you have a Goldilocks house, that special residence that might have things that other residences in the same tract don't have. Maybe you have a different view. Maybe you're at the end of a cul-de-sac. Maybe you have a single story amongst 2-story houses. Maybe you have blah, 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 blah. All of those things are going to help, even the blah, 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 blah. All right. I'm off the soapbox. I'm Connor McIver. When you're ready, reach out. You can find me at santaclaritaopenhouses.com. Something else, sellersonlyagent.com. Let's go with that one. I build a lot, kind of a nerd. All right, I'll see you in the next one. Thanks for watching, and that's the rant. See you tomorrow.